In comparison to last year, Bitcoin has enjoyed a successful year so far, and it could get a whole lot better if you're a Bitcoin investor if the United States defaults on its debt. Despite the regulatory collapse and price volatility, enthusiasts remain optimistic about the future of cryptocurrencies. The state of crypto has appeared to be in jeopardy in face of government-related crackdown, a financial collapse, and ongoing inflation. This begs the question of whether the crypto winter is over or not. But before we jump in, please make sure you like and subscribe to help No Cap Capitalist keep producing more content for you. Thanks. Now on with the video. According to Jeff Kendrick, head of research for digital assets at Standard Chartered, this is the case. Recently, he said the US default could force Bitcoin to grow by roughly 20,000 or nearly 70% from present values. In addition to the potential for extraordinary profits, particularly during risky periods, cryptocurrencies continue to be hotly contested. Crypto's tail will continue to grow, whether it ends up just being another hazardous investment or a groundbreaking financial tool. If you told someone 10 or even 5 years ago that you wanted to work in the cryptocurrency industry, they would probably raise an eyebrow. Either they wouldn't understand what you were saying, or they would believe you were making a very big leap. Comparatively, in the past, parents and children might have some fairly intriguing discussions about the idea of relocating to the Wild West. Given the demand for the subject and its stagnation, the debate is very different now. It is surprising how many professionals that are currently employed in this field. About 82,000 professionals were employed in blockchain, cryptocurrency, and related fields in 2022. That's an increase of over 3 times from 2019. The majority of these positions are in Web3, an open source virtual environment that may become the consumer internet of the future. As strong as Web3 may be, I believe its architecture to be noteworthy at this point. Bitcoin is frequently compared to gold, and the fact that the correlation tightened to 50% in March 2023 raises the possibility that Bitcoin isn't the yellow metal's digital relative. But I think the blockchain technology that powers Web3, cryptocurrencies like Bitcoin, will end up having a bigger impact. As a matter of fact, some improvements that were made at the first quarter of 2023. After trading around 16,500 in early January, Bitcoin reached a high of $30,000. Ethereum's value also increased to $2,000 at the same time, nearly doubling from its close of $1,071 in June 2022. The peak of global cryptocurrency market occurred in 2021 when its market cap momentarily exceeded $3 trillion. The market worth of Bitcoin was barely $900 billion at the end of 2022, a disappointing year in which the cryptocurrency saw many flash crashes. The market's condition has been infamously nicknamed the crypto winter, which is a term for the protracted bear market. Meanwhile, the issue was made worse as investor confidence in the cryptocurrency industry was damaged by high-profile crypto business failures, bankruptcies, and liquidations. Even alternative coins like Dogecoin and Shiba Inu have received attention and supported by leaders. But after what happened over the years, is the crypto winter actually over? The value of cryptocurrency increased from 2011 to 2013, and then it decreased in 2014. This was a result of failed Bitcoin exchange, which declared bankruptcy after hackers stole hundreds of millions of dollars in customer funds. From 2015 to 2017, the price of cryptocurrencies rose once again before falling in 2018, when the initial coin offering era left many investors destitute because many of the tokens they fervently purchased turned out to be fast cash grabs. And from 2019 to 2021, prices increased once more before falling in 2022 as a result of a failure of several well-known cryptocurrency businesses, including the bankrupt exchange FTX, which had a market cap of $32 billion at one point. According to the idea, this decrease in Bitcoin prices makes the cryptocurrency supply more scarce, which in turn drives up its price. On the other side, Hogan of Bitwise is of the opinion that the beginning of every 4-year cycle coincides with technological advancements. Coinbase, Kraken, and other large-scale cryptocurrency exchanges came to life in 2011, enabling regular people to purchase Bitcoin with fiat currency. Ethereum, created by Vitalik Buterin in 2015, claimed to decentralize cloud computing. The first real applications of Ethereum also debuted in 2019, including stablecoins, non-fungible tokens, and decentralized finance. In the US, the financial industry went through some difficult circumstances and had a difficult start to 2023. Things became worse and sparked more regulatory attention after the historic failure of three crypto-friendly banks in early March, namely Silicon Valley Bank, Silvergate Bank, and Signature Bank. However, the cost of Bitcoin and other popular cryptocurrencies was completely stable during these events. So you may wonder, was the fall of these institutions due to declining cryptocurrency values, or was there another factor at play? By the way, please remember to like, subscribe, and comment below. The recent banking crisis in the US, according to Standard Chartered analyst Jeff Kendrick, will benefit Bitcoin and strengthen its position as a decentralized and extremely limited asset. That analyst claimed that the push for control in Europe is a good development and will benefit cryptocurrency. He thought that the much discussed crypto winter has ended and that Bitcoin might reach 100,000 by the year's end. The crypto winter is gone, according to experts at New York-based investment firm H.C. Wainwright. According to the analyst Mike Collins, the cryptocurrency market has already begun its bull price cycle due to the sharp rise in institutional adoption, trading volumes, and the worldwide market cap of all cryptocurrencies. He backed up his claim by claiming that the next Bitcoin halving event in April 2024 has also enhanced bullish enthusiasm. In fact, each of the three halving events that have taken place so far has had a positive effect on the price of Bitcoin, with the first one seeing a price boost of up to 100%. Recently, the financial services company JP Morgan also anticipated an increase in Bitcoin prices as a result of so-called halving technical adjustments. In February, at the Bitcoin Policy Summit in Washington, U.S. Senator Ted Cruz, a Republican from Texas, voiced his appreciation for Bitcoin's recent resurgence. He claimed that Bitcoin has kept its leadership position and revealed that he buys Bitcoin once a week. He added that he has increased his holdings of digital assets by profiting from recent market declines. Hendrik Zilberg, a well-known trader, claimed on Twitter that every price decrease was not a crash and that the decreasing prices gave an opportunity to boost long positions while discussing general market movements. The trader has previously expressed the same view regarding Bitcoin, despite making this claim in connection to the chart of the NASDAQ 100 stock index. He tweeted that there was an opportunity to go long at a reduced price when Bitcoin plummeted by 9% a few weeks ago. In contrast, according to Kendrick, Bitcoin is unlikely to rise straight up in the case of a US default, since it probably comes a bit lower each day. In that scenario, he predicted that Bitcoin may initially decline by 5,000 before increasing by 25,000. He continued to say that not all cryptocurrencies would behave in the same way as Bitcoin, with some like Ethereum trading more like equities and likely experiencing a default. A default might occur later in the summer if Congress fails to raise the $3.4 trillion federal debt ceiling, which would have a seismic impact on the world financial markets. Janet Yellen, the Secretary of the Treasury, recently issued a dire warning that a default would be disastrous for the U.S. economy and cause widespread unemployment, payment problems, and higher rates to infinity. The yield on 3-month Treasury securities recently rose to a 22-year high as they mature around a potential default date. This is with House Republicans and White House still far apart on an agreement to raise the debt ceiling. As the Federal Reserve began an aggressive tightening cycle in late 2021 and into much of 2022, Bitcoin suffered a severe sell-off that hasn't fully recovered as of yet. But as First Republic Bank's troubles rekindled concerns about the financial sector, Bitcoin has increased around 80% so far in 2023 and has lately been trading close to $30,000. Kendrick, for his part, is already positive on Bitcoin and predicted in a note on Monday that it will reach $100,000 by the end of 2024 as a result of bank turbulence, Bitcoin's halving, and the anticipated halt to Fed rate hikes, among other factors. However, the paper omitted the possibility of a US default. Above all, recent opinions indicate that the crypto winter may have ended. The analytics company Santiment added that there are multiple good reasons to be upbeat about Bitcoin's price and that it appears to be in good shape from a fundamental perspective. Does this suggest that the crypto spring is about to arrive? To put it bluntly, that is a long shot. Either way, we'd love to know your thoughts in the comments section. If you enjoyed this video, make sure you click the like and subscribe buttons. Most importantly, don't forget to click the bell icon to be notified when a new video is uploaded. Also, feel free to leave a remark if you have any recommendations for videos. From No Cap Capitalist, have a great day everyone, and thanks again!